Hi everyone, welcome back to Be Rich. Due to popular demand of our last video where we had this candid conversation about
Paul Krugman.
Paul Krugman, we thought we'll do round two with Anand today about another interesting article Sashwath has bought today from Financial Times. Sashwath will brief us, then Anand will of course enlighten me on how not so straight my thinking process is, which I always love from my brother.
Also, this will be the last video I do in the studio for a while because I'll be going to college. But we'll still be doing SteamYard, which will come up. Stay in tune for that. Now, coming to the topic of today, I want to talk to you about BlackRock. It's one of the largest financial management houses in the US. And in the past few decades, they've had a meteoric rise in terms of assets under management. But very recently, their specialty, which is debt instruments, has not been something which was performing much. And we also talked about this in another video where we showed viewers that equity had outperformed debt over the past 10 years when interest rates were persistently low.
True.
But now the story has changed, and let's look at what's happening with BlackRock. So, BlackRock has recently come out and said that they're having great times because the interest rate has been hiked by the Federal Reserve. And they said that because the interest rate had been hiked, and now suddenly stopped, people have been flowing funds into BlackRock and especially into their debt instruments.
True.
So, that's something which is going well for BlackRock. And what we see with BlackRock is also that their profits have gone up. Although their revenue has very marginally come down because of their this thing in equities, their profits have still gone up, and their operational margin is at 42%.
True.
So the company is doing well for themselves, and they're projecting lofty gains. And their ETF market, which they said was at $2 trillion now, which has already risen a lot. They said that by 2030 it should go to $6 trillion. It should triple, is what their prediction is. Very lofty predictions.
Yes.
But so the good times for them have started. So they are pretty optimistic with their predictions. So before we go on with the article, I wanted to know what both of you thought about the debt market in the US with interest rates which have been risen and are threatening to rise. What do you think about the debt market in the US?
No, the debt market is very clear.
Yes.
If you are owning bonds like way we do own,
Yes. But that's in the Indian market.
not even in any market,
Okay.
I will not lose any principal as long as I hold it to maturity.
Okay.
Bond funds are traded in these markets.
Yes.
So what happens is,
So you're saying any loss is a notional loss?
for me, if
Yes.
I'm holding it to maturity.
Yes.
But what bond funds does is,
Yeah.
they bet on bond prices going up and coming down.
Yes.
BlackRock has had a great run over the last 20 years.
Correct.
Because interest rates have gone lower and lower. And any attempt to increase interest rates have meant there has been some outlier event.
Yeah.
I can tell you three. One is, of course, the great internet burst.
.com bubble.
.com bubble burst.
Yeah.
And the second is, of course, there is the great financial crisis.
Yes.
Then there is the COVID pandemic.
Yeah.
So any attempt at increasing interest rates,
Yeah.
there has been an outlying event which has cut down rates.
Yeah.
So the Fed's balance sheet has been increasing and bond markets have had it great.
So you're saying that before they even had a chance to raise interest rates, they had to cut it because
Yes.
.com or GFC or the COVID crisis.
Yes. And so the BlackRock had a great time.
Yes.
So this is the historic perspective of what Larry Fink.
Wouldn't you say that Larry Fink. But wouldn't you say that between the GFC and the COVID crisis, they had a couple of years?
They went up, but
Yes.
immediately it had to drop.
Yes.
Because it did not happen in 2009, you increased rates.
Yeah.
Increased rates started only in
14, 15.
15.
Yeah.
And they had to cut back immediately.
Yes.
Even in this increased interest rates, they have not decreased liquidity,
Yeah.
which the Fed's balance sheet has not come down as promised.
Yes.
And the moment a couple of banks went down under, what they did is they brought down they guaranteed it by printing more money.
Yeah.
What BlackRock is now hinting by all this lofty statement is that the Fed rate hikes are over.
Yeah.
And the Fed will start to cut rates by beginning of next year. This is what the market is also betting. But they also bet that it will cut this year. It did not. And Powell has put his neck out by saying he will increase rates twice. So you can expect a rate increase in July.
Yeah.
a pause, and maybe another one in November. That is what the market is expecting.
Yes.
And a reversal in the first half of year.
Because you believe that the core inflation rate is being persistent.
I believe,
Yes.
and as many experts believe,
Yeah.
that the fall up to 4 will be very fast.
Yeah.
4 to 2 is going to be difficult.
Once you get rid of the froth, getting past the froth
It is going to be difficult.
Yes.
And most of this drop in consumer price inflation
Yeah.
is because of correction in oil prices from last year to this year.
Yes.
So if a bump up in oil prices is going to make it look
Yes.
ugly.
Yeah.
And the bump up in oil price will happen because Saudi is definitely cutting supplies. Even the Russians are cutting supplies.
Yeah.
So you're not going to have further fall in crude prices. Crude prices will go up.
Yeah.
And the coal prices from 4.8 will drop quickly to 4. But from 4 to 2 is going to take us some distance.
Yes.
As long as the economy is not in recession,
Yeah.
the Fed cannot cut rates when inflation is about 2. The way it is going, the people said recession has come yesterday, tomorrow. But the latest GDP figures in America shows
That they're still growing.
they are still growing at 2%, which is
Yes.
pretty good.
2% for a developed country
It is
pretty
extremely good.
good. Yes.
That means the economy is firing on all cylinders.
Their unemployment really hasn't taken a hit either.
Yeah, so there is no, and there is wage price spiral is still playing out.
Yes.
So people are going to demand higher wages.
So it's almost certain that the Fed has to do more in terms
The
of...
Fed has to do 2 definitely.
Yes.
And even if it does not increase more than that,
Yeah.
it has to keep it there.
Yes.
If you raise it 2 times and keep it
You
there,
have to keep the pot simmering.
you have to keep the pot simmering.
Yeah.
That does not mean that the bond funds will gain.
Yes.
There is a possibility bond funds will lose money.
You think... But why do you think bond funds will lose money?
Because as long as it's flat,
Yeah.
it's as good as tightening.
Yes, but then that would still mean that they expect some sort of loosening ahead and they want to...
Yeah, but how long? Because you've already gone long now.
Yes.
And the Fed does not give any language indication
Yeah.
that it will loosen.
Yes.
It is the market that is expecting loosening
Yeah.
and not the Fed.
Yes.
And if there is an entire year, next year goes in waiting for loosening.
So people will start taking off chips from the bed.
Exactly.
Okay.
And the equity market is also frothy because of 7 players.
So let me get something straight. So you're saying that the people making a bet on bonds are in for the short-term loosening which they think might be on the horizon.
Yes.
So you think the people who are actually getting in terms of betting on bonds aren't really getting in for the long term, but rather are getting in so that they can see that
They
loosening.
can see if they expect over next 12 months,
Yes.
the Fed to substantially cut rates.
Yes.
And then so the bonds will rally
Yeah.
and the bond market will do well.
Yeah.
But there are 2 things happening. One is there is a wage price spiral.
Yeah.
Second, only 7 stocks.
Yeah.
That is Meta,
Your AI stocks.
the AI stocks,
Yes.
plus Tesla,
Yeah.
are what is driving the equity market
Correct.
and nothing else.
Correct.
So unless there is clear sign of recession,
Yeah.
which doesn't seem likely, I don't think BlackRock's optimism that it will make money for its bond customers is coming to fruition.
It's misplaced.
It's misplaced. What is going to happen is we are going to have a long period of
Painful.
it's going to be status quo.
Okay.
They will neither cut rates nor increase interest rates.
Observation period.
Observation period, because after all the Fed is also a political office.
Correct.
There is an election coming in America.
They
next
can't cause
year.
a recession.
They cannot cause a recession.
Yes.
So the America will try to cycle its way out. But it
Before
is
the
not.
next elections come in.
Yes. So I don't think if Jerome Powell is true to what he has said,
Yes.
he will not be in a position to cut anything for next 12 months.
Cut or raise much.
Raise though he has said he will raise by 0.5.
Yes.
So after that 0.5, unless inflation spikes, he won't do anything.
But you don't expect anything drastic happening.
I expect 0.5% hike
Yes.
by the end of this year,
Yes.
and then the status quo for 6 months at least.
But so you definitely think that the bets which people have made on bonds right now going sour are definitely on the cards.
In the next 1 year are going to go sour.
Okay. So that's what he has to say about the bond market. and BlackRock and its optimism. So one thing all of you at home have to remember, that yes, headlines do come out, but every time someone says that this time it's different, this time there's going to be something great which is happening, you have to remember to try to look at it from a rational way and look at what's happened in the past and try to look through what is considered first level thinking and look at second level thinking, which my uncle has just demonstrated. Thank you for watching. Be Rich. Please like and subscribe if you like the video. Please share it with your friends. Please comment. And if you'd like to see more of such topics or any other topics you want, please leave it in the comments below and we'll do our best to read all of them and get back to you on it. Thank you.
I'm in Tokyo on work on the 5th of August 2023. I have a lot of following in Japan, Tokyo. Those who want to meet me in Tokyo on 5th August, kindly drop me an email on the address given below or contact us on WhatsApp there. My team would get in touch with you and facilitate the meeting. Once again, I thank you for your support for Be Rich. It's a great privilege and honor that so many of you in thousands have subscribed to my channel and have supported me. I have written 2 books in English, The Alchemy of Money and Ordinary Stocks, Extraordinary Profits. These books are published by us and are ready. If you want to procure a copy, send us a message to the WhatsApp number given below and my team would respond to you. If you want an Amazon Kindle copy, you can click the link below. Finally, those who wish to consult with me can send a mail to berichenglish@gmail.com. Once again, I thank you for your support. If you like this video, press the subscribe button of my channel, hit the like button and turn on the bell notification.